Hello, today I'm sharing some charts for holdings in my portfolio that I found interesting at the close on January the 23rd, 2026. I'll share with you what I am observing on the charts and how they help form any decisions that I make on these holdings. If you enjoy videos like this, please subscribe to the channel and set notifications for future videos. Be sure to press the like button to help support the channel. Let's get started. Let's set the stage with a quick review of the overall market action this week, which the market did struggle a bit with some of the media reports and discussion about Greenland and tariffs, etc. So the SOX, the semiconductor index, was up 0.38%, and the NASDAQ 100 ended up 0.3%. The equal-weighted S&P 500 did outperform the S&P cap-weighted index by about 0.25%, but was down overall. The Dow Jones Transportation was down about 0.25%. The S&P 500 large cap-weighted index was down about 0.33%. The small caps, which have done really well year to date, took a bit of a hit this week, down about 0.4%. The Dow Jones Industrial Average and the mid cap was down a little over 0.5%. If we take a look at the sector action, the XLE energy was up 3.15%. Materials was up. Communications services was up. Healthcare managed to be up about 1.12%. Consumer staples was up about 1%, and consumer discretionary. So it's somewhat of a mixed sector action where we had a neutral sector that was up. Materials is also neutral. Communication services is aggressive. Healthcare is a blend between aggressive and defensive. Consumer staples is defensive, and consumer discretionary is aggressive. The S&P 500 was down. Technology underperformed the S&P 500. That's an aggressive group. The industrial group was down 1.61%. That's also an aggressive group. Utilities is defensive. They were down 1.91%. Real estate is defensive. It was down 2.25%. And financial is an aggressive group, and it was down 2.5% this past week. The S&P 500 struggled on Tuesday. Monday was a holiday, so we had a holiday-shortened trading week, but the S&P 500 was down, testing the 50-day moving average. It managed to move up just a bit and closed above the 50-day moving average. And by Thursday and Friday, we were right at the 20-day moving average. The 5-day average of the put-call ratio was showing a little bit of anxiety, and more puts than calls were issued. That has dropped back down below this green line here, about 0.55, that I watch pretty closely. So put-call ratio has come down a bit. We do see the S&P is above the RSI 50, and the PPO is still in bullish territory, but we did have a bit of a sell signal on Monday. When we look at the weekly view of the SPX, we can see that we stayed above the 20-week moving average. The 50-day is still upward sloping. The 200-day is upward sloping. We do have a bit of a negative divergence on the RSI as well as the PPO. So the S&P 500 on a weekly time frame is still moving somewhat higher, but we have these negative divergences, which is showing that there's some risk of a pullback here in the not too distant future, something that I watch. Then the last chart we'll look at in the market overview is the VIX. We did have a spike on Monday up to a value of 20, which got us above a line that indicates that we do have quite a bit of uncertainty in the market, a little bit of fear. Last time we had that was back in November, back in October, and then we had a high VIX in June, May, and then our big thrust was in April during the tariff announcements. One of the things that I see is we did drop pretty significantly a couple of days after this thrust up above 20, and we're back below a value of 17, which is somewhat cautionary. So it seems that fear has pulled back out of the market, but not quite to the level that we saw during the holiday period on the 24th, where it got to a low of about 13.47. So we'll take a look at AbbVie in a daily 1-year chart. This has a portfolio rank of 6 in my portfolio. That's up from 7 last week on price action. The 50-day is somewhat flat at the moment. We're trading below that. The 21-day is downward sloping, and AbbVie is trading slightly below that 21-day moving average. We do have a blue line here that's marking an upward trend, which we broke down below on the 5th of January, moved up above it for a couple of days, and then started trading below that upward sloping trend line on the 8th of January. I had a support line here that it came down and tested, and this week moved back off of that support line. So we're in a consolidation trend with a short-term upward bias on AbbVie. We do have an RSI that is above 40, not quite to 50. The PPO is in negative territory, and if the price action continues, we could have a bullish crossover in bearish territory on AbbVie. AbbVie does pay a dividend of 3.16% with a 5-year dividend growth rate of 6.65%. There are 19 analysts that cover AbbVie with an average 1-year price target of $239.16 with a range between 190 and 289. From a seasonality perspective, over the last 13 years, January is AbbVie's weakest month. With the exception of June, the remaining months show AbbVie closes each month higher than it started over 50% of the time, while June shows only a 46% beat rate. We move to the weekly view on AbbVie, we can see that they were up for the week 2.29%. If we look at AbbVie in fast graphs, we can see that they have a blended PE of 21.49 times, an EPS yield of 4.65. They have that dividend yield of 3.16. Over this, let's go to 13 years. That's what I typically like to look at. Over this 13-year time frame, they've had an adjusted operating earnings growth rate of 11.61%. Fast Graphs gives them a fair value ratio of 15 times. The market typically trades them a little lower at 13.31 times. So we can see they've had a drawdown in their earnings over the last few years. They're expected to be down 2% for 2025. This was basically due to one of their primary pharmaceuticals that went off patent. They have replaced that with 2 additional pharmaceuticals that are still under patent, and they're expected to regain their earnings growth 44% for next year, 11% for 2027, and 13% for 2028. They are trading above their fair value at the moment, so there's some additional risk built into AbbVie at these particular prices, at least for this year. Even if they trade sideways, they would be back to their fair value by the end of next year. So this is one that I've owned for quite a while. It's performed very well for me. The prices are somewhat cyclical, so I do trade this not frequently, but I trade it off and on. As it gets to lower prices, I'll buy some shares, and as it gets to higher prices, I'll do a little bit of trimming. Next, we'll look at Amazon in the 1-year daily price chart. They have a portfolio rank of 21. This cyan colored line is where I have their blended intrinsic value calculated at $238.97. There are 45 analysts that cover Amazon with a 1-year price target of $285.38, with a range between $195 to $340. They are trading above a downward sloping 50. They're trading right at their 21-day moving average, which by the end of the week had managed to turn back upward, so it is trending a bit higher. I have a couple support lines here that I'm watching around 206 down to 201, and I have some resistance lines at around 250 and 260. So Amazon is consolidating. They do have a little bit of a short-term upward bias. The RSI is above 50 at the moment. We did have a sell signal in bullish territory on last Friday, the 16th of January. If we look at them in the weekly view, we can see that their RSI is above 50. They are in bullish territory. And on the weekly view, we actually had a buy signal this week. The money flow is currently negative in the weekly chart. If we look at Amazon in Fast Graphs, we can see that they have a blended PE of 33.06 times, an EPS yield of 3.03. They don't pay a dividend. They've had a operating adjusted earnings growth rate over this 13-year period of 49.77%. Their fair value is 49.77 times, and their normal market multiple is 98.22 times. They are currently trading below what Fast Graphs calculates as fair value. They are expected to have earnings growth of 30% this year. Next year it's at 10%. 2027 it's at 22%. And 2028 is 23%. So it looks like Amazon would be a pretty good buy price at the moment. This is Ares Capital, symbol ARCC, in a 1-year daily price chart. They have a portfolio rank of 20 in my portfolio. That's up from 19 last week, basically on price action. I have their book value here at this cyan colored line around, it is exactly $20 is what their reported book value is. That's really where I like to buy them. Anywhere below their book value is where I try to target my buys. And if they move too high, then I'll do some trimming, go underweight on them. And as they get down closer to their book value, which happens quite frequently, then I will re-add to my portfolio and bring it back up to portfolio weight. There are 10 analysts that cover ARCC with a 1-year price target of $22.50 and a range between $21 and $24. They are trading above an upward sloping 21-day moving average, 50-day moving average, and the 200-day is flat. They are trading above that right now. It had been declining and has since flattened out. So I would say the overall trend for ARCC is in consolidation, but we do have this shorter term, maybe 6 weeks or so, upward trend in the prices. They do pay a dividend of 9.24%, and they have a 5-year dividend growth rate of 3.71%. We look at, let's look at the RSI is above 50 at the moment. It had gotten closer to 70, so the prices are still moving up while the RSI is starting to move back down, so I expect them to level out, especially as they're reaching this level of resistance here. We did get a buy signal in bullish territory at the beginning of the year, and the PPO is upward sloping at the moment. If we look at them in the weekly view, we can see that the RSI is above 50. It's been increasing pretty much since the 6th of October. The PPO is in a buy signal on ARCC and has been since the 24th of November. And the accumulation over this 3-year period had been increasing and somewhat leveling out at the moment, with the money flow currently being in negative territory. This is Citigroup in a daily 1-year price chart. They have a book value of around $110 at the moment. That is up from $108 last quarter before they reported their earnings. So that's an increase of 1.48% quarter over quarter, or 8.26% year over year. They continue to have one of the lowest price to book values of the 5 diversified banks, with a price to book ratio of 1.03 per share compared to the average of 1.68, and that gives us about a 63% upside on that particular metric. Going into the earnings, they were performing very well. There was a little bit of a pullback, but they did report their earnings, and they had a price decline for a couple of days and then started moving higher. And then we had the news about caps on credit card interest rates, and that drove all of the banks a little lower. I do have a stop loss on them of about $116.69, which is the same as it was last week. I chose not to trim as the price fell on the news event around those credit card interest rates, and Citi did manage to hold support line. So I ignored my stop loss on that and actually did pick up some additional shares within the last 2 weeks. Citi does have their investor day scheduled for Thursday, May 7th, so that could prove to be a pretty major catalyst for Citigroup moving forward. I have a price target on them of $160 to $185 by year end. And I did do a detailed video on Citi and how I arrived at that particular price if you want to take a look at that video. So they do have a downward sloping 21-day moving average at the moment. The 50-day is still moving higher. They've traded above that 50 line for quite some time, since the end of November. This support line is above that 50-day moving average. We do have an RSI that did drop below 50, so it's in negative territory at the moment. We did get a sell signal on the 8th of January for Citi. I think that will be somewhat short-lived when we get a recovery in these prices. I do have a resistance line up around $122, where they've reached that level at least twice over the last couple of months. Overall trend is in an uptrend with a short-term bias to the downside. When we look at the weekly chart, we can see that they were somewhat overbought for a period. They have moved out of that overbought territory. They're still above the 60 RSI. We had a buy signal on the 1st of December, and we got a sell signal on basically this week. Accumulation still looks really good over this 3-year time frame, and money flow has been positive on this one since December of 2023. They were down 3.77% this week. If we look at Citigroup in fast graphs, we can see that they're trading slightly above their fair value at the moment. They have a blended PE of 15.78, an EPS yield of 6.34%. They do have a dividend yield of 2.11%. Their adjusted operating earnings growth rate has been 6.84% over this time frame. Fastgraphs has a fair value calculation of 15 times, and the normal market multiple is 11.48 times. They did have a retraction in their earnings in 2022 and 2023. And they grew those earnings in 2024, and 18%. They grew them in 2025, and they're expected to grow them again in 2026 by 47%. This is Centene, a healthcare provider, symbol CNC. They had a really big, significant drop in July of 2025. They dropped 40% basically in one day. That's because they withdrew their guidance, as several other healthcare providers had done around this time frame. Now that created a pretty significant downtrend in their price action. So we've had some downtrend lines that we've been watching. They had been breaking out above those trend lines, which was good news. They're up about 82% from this August 7th low. They are ranked 26th in my portfolio. I have a blended value on them of $42.33. There are 16 analysts that cover Centene with a 1-year price target of $41.19 and a range between $28 and $61. They are trading above an upward sloping 21-day and 50-day. The 200-day is still downward sloping, and it looks like the 50-day maybe crossing above the 200-day. That would give us a golden cross here within the next possibly week or two. They did get to this trend line, which was actually established at this point, and have been trading right along that trend line. So the overall trend is in accumulation. That indicates that institutions are buying this name. But in the short term, we do see a bias to the downside. I consider this a covered call candidate at this point. So I do have 2 covered calls open on this one, with an expiration of the 6th of February and a strike price of 52. The RSI is above the 60. It's currently at 64.7. We did get a sell signal on the daily view around the 21st of January. When we look at them in the weekly view, we also have an RSI above 60. We got a buy signal on the PPO on the 8th of September, and that's still in place and now in bullish territory. We can see that it is under accumulation on the weekly view, and the money flow is currently positive. When we look at Centene in fast graphs, we can see that they have a blended PE of 22.26, an EPS yield of 4.49. Over this 13-year time frame, they have an adjusted operating earnings growth rate of 11.82%. Fast graphs calculates their fair value ratio at 15 times, and their normal PE is 15.21 times. They did have a very significant pullback in their earnings for 2025, but they are expected to grow over the next 3 years, with estimates of 44% for 2026, 49% for 2027, and 50% for 2028. This is Costco in the 1-year daily price chart. They have a portfolio rank of 19 in my portfolio. I have a blended intrinsic value on them of $616. There are 21 analysts that cover Costco with an average price target of $1,056 and a range between $769 and $1,225. At the Friday close, they did close up 0.73%, and that was a 65-day swing high. Costco has closed higher 11 out of the last 14 trading sessions. The overall trend for Costco is accumulation with a short-term downward bias, so institutions are buying this name. In my weekly video on the 19th, I talked about this high volume here and the price that they were currently sitting. I went and did some analysis and decided that that was the bottom. So if you want to take a look at that video to see how I determined that was the bottom, you can take a look at that. It was indeed just within a day or two of the bottom, and since that time they're up about 16.27%. I had set a short-term or near-term price target of $996, and that was on recent price action, and we're only about $10 away from that price at the moment. They are trading above a 5-day moving average that's upward sloping, 21-day that's upward sloping. The 50-day has stopped declining and is now rising, and the 200-day, which had been declining, is now leveling out and has moved back upward. The RSI is in overbought condition, currently sitting at 75. The PPO has had a buy signal since the beginning of this year and is in bullish territory. If we look at the weekly chart, we can see that they have an RSI near 60. We got a buy signal on the 5th of January. That is now moved into bullish territory as well. They were up 2.04%, and that was also a 13-week swing high. So on the daily time frame, they're showing some bullishness as well as the weekly time frame. This is CRMD, CorMedix, in the 1-year daily price chart. They did have a pretty significant drop on the 8th of January, and basically they issued lower than expected full year 2026 guidance, and that drove the price lower. They did come down and test this support line that I had drawn back from April the 9th or so. So they are in an overall downtrend, but it did find support here. And this week they were up. There are 7 analysts that cover CorMedix with an average price target of $15.29. That is down $2 from last week. The range remains between 12 and 22. So one of the things that I mentioned in my video last week is that it was interesting that even after this drop that the analysts did not revise their price target, but they did finally catch up with this guidance reduction and did lower their average price target $2. I still have a price target on them of $14. I have a blended value on them of $25.07. And I did do a detailed video on this particular holding on the 30th of November. If you're interested on what my overall thoughts on CRMD in the future and what I expect from them. On the 10th of February, they will have their Analyst Day. And one of the big questions we'll be hoping to get answered is, can this management team prove that the patient growth is strong enough to overcome the TDAPA reimbursement hurdles that they're facing, which caused this reduction in the full year guidance. So they are trading below a downward sloping 20-day, downward sloping 50-day, and the 200-day is still upward sloping at the moment. The RSI has moved out of oversold territory. We did get a buy signal on them a couple of days before the actual drop on the 5th of January. The downslope of this 20-day 6 moving average has stopped declining and looks to be turning back upward. If we look at them in the weekly view, we can see that they were up 7.23%. The RSI never did get to oversold territory in the weekly view, and it is starting to move back up, but it's still only at 36. We also got the sell signal in the weekly view on the 5th of January, and that is still increasing at the moment. In the weekly view, money flow is negative at the moment. This is FIGR Technology Solutions in the daily. This is only a 6-month chart. It's a relatively new company. They IPO'd on the 11th of September. Normally I don't buy IPOs, but when I looked at this company They were very intriguing to me and decided to get into this one. Not early enough, but still pretty early. They have a portfolio rank of 42 in my portfolio, and that's up from 47 last week. And that's basically because I purchased an additional 21 shares on Wednesday. On Tuesday, during the drop in the overall market. They did continue to trade lower from the week, and they're at my stop loss or trim point. So that's a decision that I'll need to make this week on whether I go ahead and trim this. I will decide that this week. I did do a detailed review of FIGR Solutions that I published on the 20th of January. If you're interested on why I entered this particular company, the overall trend is an upward trend. We do have a short-term bias to the downside. They are trading above a 21-day that is upward sloping and a 50-day that is upward sloping. We don't have a 200-day yet in place because there haven't been a company for 200 days yet. There are 9 analysts that cover FIGR with a 1-year price target of $56.89 and a range between $40 and $75. FIGR was down 15.02% this week, but that was following a 27.26% gain for the week prior. We do have an RSI that is still above 60. They have been in a buy configuration on the PPO since the 3rd of December. The black line is starting to decrease and could get down to the signal line, which would indicate a sell signal. So this is one that I'm watching pretty closely and need to determine whether I'm going to take my loss on this purchase of shares or whether I just continue to hold it. They are still above what I have as a support line at about $59 or so I'll be watching that this week. This is Genmab, symbol GMAB in the 1-year daily price chart. This is one that I sold out of on the 31st of December. And that was basically because when I look at the seasonality for GMAB, they tend to be seasonally weak in the first quarter of the year. So I closed it out, but I'm continuing to watch it very closely. I do have a blended value on them of $48.20. There are 5 analysts that cover Genmab with an average price target of $40. That's down slightly from $40.40 last week, and a range between $27 and $48. We do see they have a upward sloping 50 line. The 20-day had turned down in trading last week, but is now moving back up, and they came up to test this resistance line once more. They do have an RSI that is above the midpoint, currently at 55. The PPO has been oscillating and is currently in a sell signal as of the 16th of January, which would have been last Friday. So when I look at the price action, it looks like I may have made the incorrect choice, but we do have a sell signal here. When we look at the weekly chart, we did see that they rose this past week 5.05%. The RSI is above 60. The PPO, we did get a sell signal on the 27th of October. So we haven't negative bearish divergence on this one because we do see higher prices, but we are seeing lower PPO. So I think my overall thesis is still intact on this one, and I will continue to watch that as we go through the first quarter of this year. And if it plays out the way that I think it will, I'll be adding back shares for this particular company. Next, we'll take a look at Alphabet with the symbol GOOG. They have a portfolio rank of 22 in my portfolio. I have a blended intrinsic value on them of $319.47. They are in an overall uptrend, but they have been consolidating over the last 2 weeks. There are 43 analysts that cover Alphabet with an average price target of $325.42. That is up from last week, $320.35. And the analysts have a range between $190 and $400. The 5-day moving average did reverse its upward trend. Last week, the 21-day is still upward sloping, and they are trading above that and the 5-day moving average. The 50-day is still upward sloping as well, and the 200-day is still upward sloping. They do have an RSI that reached 60 this past week and then declined to 57. I have mentioned over the last few weeks that I've been watching this bearish negative divergence on the RSI, so we have higher prices but lower RSI over time. That bearish negative divergence is also present on the PPO. We did get a buy signal earlier this week, sell signal earlier this week after getting a buy signal on the 8th of January. I've also mentioned that I've been concerned about how far above their 200-day in particular they've been trading, but they are 4.81% above their 50-day moving average. That did decrease slightly from 6.57% last week. And the 200-day is 42.42% above the 200-day moving average, and that decreased from 45.47 last week. I do have a trim point stop loss on them of $318.50, and that's the same as it was last week. If we look at them in the weekly chart, we can see that they are in an overbought condition. We did get a sell signal on the 22nd of December. The accumulation still looks strong, as well as the money flow. They were down 0.58% this past week. And last week they did set an all-time high. Weekly high close. Next, we'll look at Meta Platforms in the 1-year daily price chart. They have a portfolio rank of 29, and that's up from 30 last week, basically on price action. I have a blended value on Meta of $817.73. They are in an overall trend of consolidation, with a short-term bias to the upside and a reversal of a declining trend over the last couple of weeks. This week they did reverse that. They are trading above an upward sloping 21-day and 50-day, and the 200-day is also moving a bit higher. They are trading right at a resistance level that I have set at $664. The next resistance point will be 681, which is just above the 200-day moving average. And then if they can clear that particular resistance point, then the next run would be to about 758. They do have an RSI that did move above 50, currently sitting at 56. They had been in a downtrend on the PPO, but it looks like we got a crossover on Friday in bearish territory. There are 41 analysts that cover Meta with an average price target of $819.41. That is down from last week's price target of $825.29. And the analysts have a range between $645 and $1,117. If we look at them on the weekly chart, we can see they haven't quite reached the 50 level on the RSI, so they're still in bearish territory on the RSI. But once again, we did get a weekly crossover on the PPO, but that is in bearish territory. And in the weekly money flow, we can see that it is currently negative. They were up 6.21% on a weekly basis. Next, we'll take a look at Hershey, symbol HSY, in the 1-year daily price chart. Last week, we did talk about this run higher as the market tended to be rotating to more safety-related stocks, and Hershey definitely falls into that category. Had a really nice run in the previous week. They did reach a 52-week high, and now they're pulling back slightly. They do have a portfolio ranking of 31 in my portfolio. That is down from 23 last week because I did trim some shares as they came off this high. I have an intrinsic value calculation on them of just above $190. There are 16 analysts that cover Hershey with a 1-year price target of $193.06. That is up from last week of $187.28, with a range between $146 and $222. That bottom range did move up from $134 last week. They do pay a dividend of 2.87% and a 5-year dividend growth rate of 11.68%. They do have an RSI that's above 50. We had a buy signal on them on the 9th of January. It looks like that'll be crossing to a sell signal here within the next few days if this downtrend continues. They did trade to an upward sloping 21-day moving average. The 50-day is upward sloping along with the 200-day moving average. When we look at them in the weekly view, they were down 3.32% this week, but that was after a 4.6% gain last week, which I mentioned is a 52-week high. The RSI is above 50. It's coming down from 60. We do have a buy signal on them in the weekly view that was triggered on the 5th of January, and the money flow is positive. If we look at Hershey in fast graphs, we do see that they have a blended PE of 31.46 times, an EPS yield of 3.18, and the dividend yield of 2.87 over this 13-year time frame. They do have an adjusted operating earnings growth rate of 5.44 times. Fastgraphs has a fair value calculated on them of 15 times. Their normal PE is 23.57 times. They did have a contraction in their earnings in 2024, 2025. Basically, I think that was related to cocoa prices and an overall distaste for consumer staple stocks. They are expected to expand their earnings in 2026 by 17%, 2027 by 14%, and 2028 by 3%. They are trading above both their fair value, the orange line, and their normal market multiple, which is the blue line. That's why I decided to trim them. They had gotten above their intrinsic value, and I thought it was a nice time to actually trim some of those shares and wait for a better entry point. So with the sell, we can look at my share transaction analysis. So this was my first sell of Hershey, and I sold 20 shares, which were these 4 highlighted in green that I sold. So I now hold 40 shares. My total gain has been 4.8%. I've received dividends of $412 for 3.7%, or an overall total return of 8.6%. I've made a total of 13 trades. 9 of them are open. 4 of the trades are closed. 11 have been winning trades and 2 are losing trades. My total gain has been $57.83 per trade, and the ones that are in a losing position was a total of $52.26 per trade. That gives me a win rate of 85% and a gain to loss ratio of 1.11 to 1. Next, we'll take a look at Johnson & Johnson, which has a portfolio rank of 15. They are in an overall uptrend. They have a blended intrinsic value, in my opinion, of $172.57. There are 17 analysts that cover J&J with an average price target of $220.41, and that's up from $209.20, with a range between $153 and $265, and that is up from $240 last week. The seasonal performance for J&J during the first half of the year is somewhat neutral. So I had been selling covered calls. I thought that was a reasonable thing to do, but it turned out that it hasn't been too reasonable. So I did have to buy back, so I didn't want to lose the shares. I did have to buy back this call that I had sold, and I'm going to stop selling covered calls on these because they haven't performed very well because of this upward price trend that we've had. They do have support at around $213. I have a trim point on them of $216.59, and that's up from $214.90 last week. So like I said, I am going to stop selling covered calls on this one until I see a clear reversal in the pricing. So they are trading above a upward sloping 5-day moving average, a 50-day moving average, and the 200-day moving average, and they're currently trading about 25% above this 200-day moving average. I also see a bearish negative divergence on the RSI as well as the PPO. That gave me some confidence to sell those covered calls, but that has not worked out. So I will stop doing that, at least for the time being. If we look at them on the weekly view, they were up 0.68% for the week. but that was an all-time weekly high close. If we look at them in fast graphs, they are overvalued as far as fast graphs is concerned. They are trading at a blended PE of 20.31 times. They have an EPS yield of 4.92 times, a dividend yield of 2.36%. Over this 13-year period, they've had an adjusted operating earnings growth rate of 6.17%. Fastgraphs has a fair value ratio of 15 times. Their normal PE ratio is 17.25 times. We can see that Johnson & Johnson is trading at one of the most extended values over this 13-year time frame at the moment. So I think there's some risk with this one, but the character of this particular stock and the value that investors are putting on it are pretty high at the moment. They are expected to grow their earnings by 7% in 2026, 8% in 2027, and 8% in 2028. They have already reported, so we did see that they had an 8% earnings growth in 2025. So I think this one is overextended in its pricing, but until I see the price action actually reverse course, I'm going to steer away from those close or covered calls. If we look at the share transaction analysis, I've only sold one tranche of shares so far. I currently hold 100. I have a total overall gain on them of 39.1%. I have dividends of $925, which contributed 5.6%, and the covered calls have not played out the way that I expected them to, so I've actually detracted from my overall return by negative 4.8% on the options. So my total return is 39.8%. If I just bought and held them without trading options, I would have a return of 45.6%. So this is one where I'm actually have actually hurt my total return by trading the options. I made a total of 18 trades. 18 of them are winning trades. I have closed one. My overall gain is $365.48 per trade. I don't have any losing trades, so my win rate's 100%, and the gain-loss ratio is undefined in this case. This is Jackson Financial, symbol JXN in the 1-year daily price chart. We can see that they are trading above an upward sloping 21-day, 50-day, and 200-day moving average. The overall trend is upward, but we have been consolidating for the last 2 weeks. They have a blended intrinsic value of $306.30. They have a portfolio rank of 24 in my portfolio. There are 5 analysts that cover Jackson with an average 1-year price target of $108.80 and a range between $95 and 28 cents. My trim point or stop loss is $110.44, and that is unchanged from last week. They do have an RSI that is declining at the moment after being above 60. It's down to 56. We did get a sell signal on them about the 15th of January on the PPO. If we look at them in the weekly chart, they were in an overbought condition 3 weeks ago. That has come out of that condition. They're still trading above a 60 RSI, and we're still on a buy signal on the weekly view on this one. Notice that it was down 2.17%, while the financial sector overall was down over 2.5%. So Jackson held up really well this week when you compare it to the financial sector overall. Next, we'll look at Lyft, symbol LYFT, in the 1-year daily price chart. They have a portfolio ranking in my portfolio of 47. We can see that they're trading below a downward sloping 50. They're trading above an upward sloping 200. And we have a downward sloping 21-day, which they're also trading below that. I've been selling covered calls on this one. I'm currently in the money on this particular one. January the 6th, I bought a February the 20th sold a covered call at a strike price of $25 for $49 for the 100 share option. The RSI is declining. We're currently below 40. The PPO is also declining, and we have a sell signal. The overall trend is consolidation with a short-term downward bias. I have a blended intrinsic value on them of $39.41. There are 29 analysts that cover Lyft with an average 1-year price target of $22.50 and a range between $14 and $30. When we look at the weekly view, we can see they were down 2.35%. They did hit a 65-day swing low and a 13-week swing low as well. This is Novo Nordisk, symbol NVO, and I don't currently own this one in my portfolio, but we did review this in the live stream that we had on Friday, and I've decided that early next week that I will be initiating a position in Novo. And we can see that they've been on a very lengthy decline, but they have broken above 2 downtrend resistance lines. They are trading above an upward sloping 5-day moving average, a 21-day moving average, and the 50-day moving average. The RSI was in overbought condition. It has moved out of that, currently sitting at 67. And we've had a buy signal on this one basically since the 12th of November. So I'm a little late getting into this one, but I really wanted to see it break out of this longer term trend line, because we had seen where it had moved up above this shorter term and then pulled back. So now that it's clearly broken above this, I'm going to go ahead and step into Novo. The overall trend that I'm seeing is accumulation. So institutional investors are moving back into this name after a strong decline in the stock over the past year. When we look at them on a weekly view, we also got a buy signal in early December. The PPO is in bullish territory, and the RSI, which had not been in bullish territory since the 9th of September, has finally moved back into bullish territory on the weekly view. The money flow is positive, and accumulation distribution is at a 3-year high. When we look at Novo Nordisk in fast graphs, we can see they have a blended PE of 17.38 times, an EPS yield of 5.75%, a dividend yield of 1.98%. We look at their growth rate over this 13-year time frame. They have an adjusted operating earnings growth rate of 11.11%, a fair value ratio of 15 times, and a normal PE of 26.01 times. We can see back in 2023 and 2024 that they had gotten quite extended above their normal market multiple, which is the blue line, and their fair value, which is the orange line. They had a very significant pullback to below fair value and are currently trading slightly above fair value. This really nice run was on their weight loss product, Ozempic. Then they had the big sell-off, and now they're getting some additional traction on the oral version of their weight loss drug. They are expected to contract in 2026 by 6% and then extend their EPS or grow their EPS by 5% in 2027 and 10% in 2028. This is Prudential, symbol PRU in the 1-year daily price chart. They've had a pretty significant decrease over the last couple of weeks. I had overweighted them in my portfolio. They have a portfolio rank of 9. I had overweighted them because I expected them to do well in the last quarter of last year, which they did perform very well. So I started trimming some shares and went a bit overweight. It did come back and test the resistance point that they set here, but then had a very significant sell-off. I did pick up an additional 10 shares to start bringing them back to equal weight in my portfolio. So they do have several resistance lines. Last week when we looked at these were support levels. They've broken down through those. The next support level that I see is $106. The overall trend is in consolidation with the short-term downward bias. They do have seasonal performance that is weak in the first quarter of the year. They have a book value of $91.72. There are 10 analysts that cover Prudential with an average price target of $118.80. That is down from, or up from $118.60 last week. And they have a range between 101 to 136. We can see that the RSI has really dropped, currently sitting at around 34. And the PPO, we got a sell signal on them on the 22nd of December, and they're currently in bearish territory. If we look at them on the weekly chart, they were down 3.58%, comparing that to the financial sector of down 2.5%, so they underperformed the financials by a full percentage point. And that was following the prior week where they were down 5.41%. If we look at them in fast graphs, they do have a blended PE of 7.4 times, an EPS yield of 13.5%, which indicates good value. They do pay a dividend, which is yielding 5.01% at the moment. Over this 13-year time frame, we can see that they've had an operating earnings growth rate of 3.97%. Fastgraphs has their fair value calculated at 15 times, and their normal PE is 8.74 times. So we can see on the chart that they are trading below both their normal market multiple and their fair value. They are expected to grow 15% their earnings in 2025, 3% in 2026, 6% in 2027, and 5% in 2028. This is Qualcomm, symbol QCOM, in the 1-year daily price chart. And last week I mentioned that I was going to close out this position, which I did on Monday. I sold my remaining shares at $156.05. And they did run up a little bit higher over the next few days. And then on Friday, they closed down a bit, still above the price where I guess it's under where I sold them. The RSI is only at 32. The PPO is in negative territory. The overall trend that I see here is they are in distribution mode, not just a downtrend, but they are in distribution, and that's where the price is below the 200-day moving average and the 50-day moving average is above the 200-day. Qualcomm appears to be in distribution, and this is where institutional investors are selling their shares to the retail public. This is usually the final stage before entering a new downtrend. So I don't have any regrets selling the shares when I did, because I do think this one is heading lower. When we look at the weekly view, we can see they were down 2.26% following a 10.33% move in the prior week. So that does officially put them in correction mode. When we look at fast graphs, they are trading below fair value at the moment. But one thing I see is a pretty severe reduction in earnings growth over the next 3 years compared to 18%, 21%, 104%. We're basically seeing 1% in their fiscal year, which ends in September, 3% for the following year, and 4% for the year after that. So I'm glad I sold these and continue to watch this in my watch list, but I don't have any inclination that I'll be back in this name anytime soon. Next, we'll look at Rocket Lab, symbol RKLB. They have a portfolio rank of 48 in my portfolio. It's a pretty small position. They are trading above an upward sloping 21-day, 50-day, and 200-day moving average. I have this line red. It should actually be green because it is a support level. Their RSI is still above 60. They had been in overbought territory for quite some time, but they're still holding above 60. We did get a sell signal on them on the 20th of January in the daily view. There are 13 analysts that cover Rocket Lab with an average price target of $63.08. That is up from $53.23 last week. And they have a really wide range between $16 and $120, which is also up from $90 last week. I do have a trim point on this one of $82.47, which is the same as it was last week. We look at them in the weekly view, they're still in overbought territory, may have just moved out of it slightly. We still have a buy signal on them in the weekly view that started on the 15th of December. They're pretty much at a 3-year high on the accumulation, and the money flow is currently positive. They were down 7.68% this past week, but that followed a week where they were up 13.49%. Next, we'll look at RTX, which has a portfolio rank of 37 in my portfolio. I have a blended intrinsic value on them of $121.84. We have this 1-year trend channel that they've been trading in between. They currently are above that uptrend channel at the moment. I can see on this one that when they test the 50-day moving average, that typically indicates a pretty good time to buy, or even at the bottom of this trend channel. I did trim some shares, and I'm waiting now for this to come back down to the 50-day or the bottom of the trend channel. They are in an overall uptrend for the trend movement. They do have a 200-day that's also moving higher. They have an RSI that is still above 60. They've been in a buy signal on the daily view since about the 10th of December. It looks like maybe we had a sell signal issued on Friday. But that's in bullish territory, so we'll have to keep an eye on this one. The accumulation has somewhat leveled out over this period of time, and the money flow is neutral. They do report earnings on Tuesday, January the 27th. I do have a trim point on them of $191.15, and that's up from $198.18 last week. If we look at them in the weekly view, they're still in an overbought condition. They have a buy signal on the PPO. Accumulation is pretty much at a 3-year high, and the money flow is positive at the moment. When we look at them in fast graphs, we can see that they are trading at a 31.42 times blended PE. The EPS yield is 3.18%, and the dividend yield is 1.39%. Over this time frame, they've had an operating earnings growth rate of 6.17%, a fair value ratio of 15 times, and a normal PE of 19.27 times. One of my concerns with RTX is they are very extended above both their market multiple and their fair value, so the risk is high on RTX at the moment. In 2025, they're expected to have an 8% earnings growth rate. We'll know what that actually is on Tuesday. For 2026, they're expected to grow 8%. 2027 is 12%, and then back to 8% for 2028. Lastly, we'll look at UPS. They have a portfolio rank of 18 in my portfolio. They're generally in an overall uptrend. They also report earnings this Tuesday, January the 27th, before the market opens. I have a blended intrinsic value on them of about $107. There are 19 analysts that cover UPS with an average price target of $108.11, up from $106.74 last week, and a range between $75 and $147. They are trading above an upward sloping 21-day, 50-day, and the 200-day has stopped declining and is now turning upward. They have broken through a lot of resistance on this uptrend, the most recent one being around $102, and now they're consolidating right around their intrinsic value. The next resistance point that I see is about $118. They do have an RSI that's bullish and a PPO that's bullish. We did have somewhat of a negative crossover. On December the 3rd, I did have a price target of $108.25. That was basically off this formation of a cup with handle. It did hit that target on January the 9th intraday, and on the 15th it actually closed above that target. It is currently trading just slightly below that price at the moment. When we look at the weekly chart, We can also see the RSI is in positive territory. The PPO has been on a buy signal since about the 6th of October. That still is in bullish territory and seems to be improving. Accumulation, we've had a little bit of distribution this past week, but accumulation is near a 3-year high, and the money flow is also positive. They did have a weekly change of 1% this week. When we look at them in fast graphs, we can see they are trading about fair value, just slightly above. And after some earnings contractions over the last 3 years, they are expected to grow their earnings 2% this year, 12% in 2027, and 5% in 2028. They do have a blended PE of 15.47 times, an EPS yield of 6.46, a dividend yield of 6.08%. And over this time frame, they've grown their earnings on average 3.4%. They have a fair value of 15 times and a normal market multiple of 16.96 times. If you found this video helpful, please remember to subscribe to the channel and be sure to set your notifications so you'll be notified by YouTube when I post videos in the future. Also, be sure to press that like button to help support the channel. I wish you the best in your investment journey and remember to trade well. We'll talk again soon. Thank you.